On May 3rd, the United States Securities and Exchange Commission, also known as the SEC, announced that it would nearly double the number of personnel responsible for safeguarding investors in the cryptocurrency market. Does this mean that cryptocurrencies will be regulated in the United States? If so, should you, as an investor, be worried about the new regulations? Well, why not stick around to the end of the video and find out for yourself? Before we begin, make sure you check out the description below for some of our recommended crypto websites and wallets. Cryptocurrency regulation can be quite a controversial topic, and we think that you should be welcoming some level of cryptocurrency regulations. Hey, we already did a very detailed video on the same topic, so we suggest you check that one out to learn more about cryptocurrency regulations. But for starters, cryptocurrency regulation can be a good thing, especially considering the fact that the cryptocurrency market is extremely volatile, which makes things really difficult for cryptocurrencies to even be considered as alternatives to the fiat currencies we have today. If you are an investor, regulations can be good and bad, because the core philosophy of cryptocurrencies lies in decentralization, which results in volatility. Due to decentralization, these assets are not backed by any central bank or government authority. Volatility is the reason why cryptocurrencies like Bitcoin are considered to be high-risk, high-return assets, which means people made huge amounts of money and lost even more because of this volatility as a result of decentralization. The reason why we are talking about crypto regulation and why so many governments are concerned about cryptocurrencies or just about anything blockchain is because of the mainstream adoption of cryptocurrencies that we had in 2021. You know that cryptocurrencies, at least most of them, are completely decentralized, which means that there are so many people debating about the role of government, especially when capital is moved from one place to another, all with the help of blockchain and without government intervention. Crypto-related crime has grown over the last 2 years, and scammers went away with at least $14 billion worth of crypto in 2021, which is almost twice the amount when compared to the $7.8 billion taken by scammers in 2020, according to a report by blockchain data firm Chainalysis. Cryptocurrencies don't have any intrinsic value to begin with. They are also not backed up by any tangible assets like gold, which makes it really difficult for regulators and also for investors. These assets are valued depending on what people are willing to pay for them, and also when there is a huge hype surrounding a particular coin. So many new coins enter the market with a promise to take your investments to the moon, but most likely it's a scam. There is a lot of uncertainty in the crypto space even today, which is why financial experts always advise investors to keep their crypto holding under 5% of their entire investment portfolio. And they should not be investing all of their savings into cryptocurrencies because that is just a terrible move when it comes to investing money into anything, let alone something as volatile as cryptocurrency. On the other side, there are crypto enthusiasts who oppose new regulations because they think that it is going to hinder innovation and will also go against the fundamental principle of cryptocurrency, which has always been decentralization. With all the issues that still plague the crypto market, the SEC is now adding 20 additional staff positions to the unit that is responsible for protecting investors in the cryptocurrency markets from cyber threats and many other threats in the crypto domain. On May 3rd, the newly renamed Crypto Assets and Cyber Unit, which was formerly known as Cyber Unit in the Division of Enforcement, will now grow from 30 to 50 dedicated positions. This 20 new positions would add to the ranks of supervisors, investigative staff attorneys, fraud analysts, and trial counsels. These new unit members will be focusing on securities law violations connected to cryptic asset offerings, exchanges, lending, and staking products, decentralized finance platforms, stable coins, and also NFTs. Gurbir S. Grewal, the director of the SEC's Division of Enforcement, said, "Crypto markets have exploded in recent years, with retail investors bearing the brunt of abuses in this space. Meanwhile, cyber-related threats continue to pose existential risks to our financial markets and participants. The bolstered Crypto Assets and Cyber Unit will be at the forefront of protecting investors and ensuring fair and orderly markets in the face of these critical challenges." SEC Chairman Gary Gensler said, "The U.S. has the greatest capital markets because investors have faith in them. And as more investors access the crypto markets, it is increasingly important to dedicate more resources to protecting them." The Division of Enforcement's Crypto Assets and Cyber Unit has successfully brought dozens of cases against those seeking to take advantage of investors in crypto markets. By nearly doubling the size of this key unit, the SEC will be better equipped to police wrongdoing in the crypto markets while continuing to identify disclosure and control issues with respect to cybersecurity. The SEC might want to regulate cryptocurrencies to bring more stability to the crypto market, which would be really a good thing if you want cryptocurrencies to replace the fiat currencies of today. The regulations are here to protect long-term investors by preventing fraudulent activity within the cryptocurrency space. With more regulations, governments will be able to protect clear guidance to allow companies to innovate in the crypto space and investors to keep their money safe from scammers. Today, we have more than 17,000 altcoins, and they are a lot more volatile and speculative than Bitcoin. These new altcoins also come with higher risk of crypto scams and frauds. Crypto experts understand the risks in the crypto space, which could be the reason why so many investors want cryptos to be regulated. And we cannot blame them, because cryptocurrencies are extremely risky assets to invest in. And that risk factor also made people millionaires, and the same risk factor also resulted in so many people losing a lot of money in the crypto space because of all these scams. For those who are worried about the crypto market manipulation and several other fraudulent activities in the cryptocurrency space, this move by the SEC might be a pleasant one, because the SEC Cyber Unit was successful in controlling the crimes done by scammers seeking to take advantage of new investors in the cryptocurrency market. Gary Gensler said, by nearly doubling the size of this key unit, the SEC will be better equipped to police wrongdoing in the crypto markets while continuing to identify disclosure and control issues with respect to cybersecurity. But the news was not well received by SEC Commissioner Hester Peirce. She pointed out that the agency is a regulatory agency with an enforcement division rather than an enforcement organization. And she also asked, why are we leading with enforcement in crypto? Peirce has always been one of the vocal advocates for cryptocurrency regulation at the federal level in the United States. She advocated for crypto regulations rather than focusing on enforcement. Peirce also slammed the SEC for a $10 million settlement with cryptocurrency exchange Poloniex. Peirce wanted to highlight the not-so-well-defined regulatory environment that cryptocurrencies must navigate in the United States. Gary Gensler also told several lawmakers that his agency needed more staff to deal with new financial technologies like blockchain and cryptocurrencies. Gensler also previously emphasized that the SEC protection for investors for traditional assets should also apply to crypto traders. And Gensler also urged crypto firms with securities to register in order to safeguard investors. But the problem has always been the lack of regulatory clarity in the United States, which is affected by various authorities like the SEC, Commodities Future Trading Commission, and Financial Crimes Enforcement Network, at least according to several cryptocurrency firms. The current situation of the cryptocurrency market is quite speculative. Cryptocurrencies don't have any intrinsic value, and they're not backed up by any tangible assets. That is also the case with several crypto startups. Most of them are based on their ability to burn cash rather than earn it. Satoshi Nakamoto's Bitcoin was supposed to be a currency that can either coexist with the fiat currencies or completely replace them. But even today, we don't think that is possible, because cryptocurrencies like Bitcoin still derives its value from the demand rather than its real-world utility, which means as of now, a digital currency has little to no use as an alternative medium for settling payments. It can only be used as a store of value. The volatility of crypto assets are still a huge problem for it to ever be considered as an alternative to fiat currencies. And we think regulations might help stabilize the crypto market, and soon, we might even have central bank digital currencies that would change everything we know about value transfer today. Or at least some form of cryptocurrency is here to exist. If the SEC becomes successful regulating crypto, you could expect more stability in the cryptocurrency market, which means regulating cryptocurrencies could be a very healthy development for the entire industry, at least for the investors. You could also see a huge increase in investor protection and confidence, because right now, cryptocurrencies have little to no protection in the market, because there is no regulatory framework to ensure the protection of assets, which means if you get scammed, you can't complain to anybody. Your loss will be extremely personal, and you have to deal with it all by yourself. Maybe all of these regulations by the SEC would give us a safer crypto ecosystem.